Good day to one and all. This is Dr. Sivaraman of InnoIndices.com. I'll be presenting Tracking the Forex Market Together webinar. Yesterday I was supposed to give the part 2 and there was a technical problem. I could not present it. So instead of 17, the same time 14 to 14:45 GMT, I am presenting it on 18th today. So it is a simple market tracking technique and effective trading strategy. By the combination of these two, we will be in a position to do the intraday trades effectively at ease. So that is what I'm going to explain to you. And those who attended the webinar yesterday, you know that I had taken some positions yesterday during the European session, and then I wanted to explain what happened to those positions. Then I'll proceed with it of what positions we can take today. So yesterday I was explaining to you that Euro formed the initial low. Let me show the other slide. Okay. Yesterday Euro formed the initial high 1.516, GBP formed the initial high 1.5160 and market was staying above that during that of the European as well as during that of the start, from that of the start of the European session. They continue to hold more than that of 2 hours. So I was explaining that they are expected to make further rise in the case of GBP, since they are not breached 5160 and gone below, and there was not the extended stop on during that of the data release or the minutes of BOE by 8:30 GMT yesterday. Then I was not able to get the order 5185 filled. So I just modified it to 5195 after about 30 minutes. Then it got filled. Then subsequently, during that of the late European session, they made the rise to that of 1.5264. Then immediately when I was trailing the stop and it got filled. So I kept the hedge order 1.6165 and that was the slightly 5 pips above that of the initial high. So this is what I wanted to explain to you as a technical trade. When they breach the high and stay above there for more than 30 minutes, they are 100%. They are expected to make further rise towards the close of the session. So again, in the case of USDN, I took a position at 99.59, 54. I kept the order with 4 pips. 55, I kept the order, and with 4 pips modification, I got it at 99.59, and it went up to 99.73, and it did not breach 99.86 yesterday. 99.86, it went above 55 and they formed the intermediary high 99.86 yesterday. Today also they formed 99.86 as the initial low, and then subsequently they are not gone above up to 83. That was the high shown. So I just closed the position at 99.73 with 14 pips profit. So both are technical trades. Now today I will explain to you what positions we can take. Then later on I'll explain how to read the types of move, etc. Because those who have been attending might be knowing that what is my method straight away. So let me explain with the help of my market code page. So here you come across the euro is showing 50 pips negative net change, and GBP is showing 26 pips negative net change, and Australian dollar is showing about 91 pips negative net change, and their Australian dollar is closer to that of the new low they have formed. So let us just compare it with that of the initial lows and the highs they have formed around 3:30. Now euro, the initial low was 1.3107. They are still holding it below that, and 1.3071 was formed as the low during that of the gap time. So for 30 minutes, they are not breached it. So straight away, I'll take a buy position in the case of euro. With 30 pips stop. And the exit level will be 31.28. So that is the high. Just slightly lower than that. I can keep the hedge order. I can keep the limit. So this is how we take a trading decision, because up from 13:30, that is the start of the US session, up to 14 GMT, they are not breached the initial low. So immediately, when they are not breached the new low, we did not even refer to that of the initial low. They are not breached the new low for 30 minutes during a session. So we take a buy position. Similarly, in the case of GBP, they are not breached 51.58. So they are quickly gaining the levels. So anyway. I'll just keep a limit order 10 pips below that of the market, because they are making a quick upward move, so that the traders will go and buy, and immediately they will make a dip and fill the tight stops or the trailing stop, and later on they will go up. So we'll just take a chance 8 pips below that of the current market level. If they feel it, fine. Otherwise, I'll modify in another 10-15 minutes and buy it at the market. So immediately we'll keep the stop 1.5170. Then in the case of yen, so let us compare it to that of the initial lows and the highs. So yen formed the initial low 99.47, the high was 99.86, and they are just holding above that of 99.86 throughout the Japanese and the European section, later part of Japanese and the US section. So we can straight take a buy just about 8 pips below that of the market. We'll try to keep a buy limit order, and if they fill it, fine. Otherwise, we'll modify in 10-15 minutes and take it at the market. So 10 point, 100 point, I'm just keeping it 30 pips below, and the stop will be exactly 100. Okay. Now, GBP, they are making a small dip. Let us see whether we are getting it. Okay. In the meantime, let me explain to you. And Australian dollar, they just dropped about 8 pips, and they came down to 90 pips, and then they are recovering it. So here, we have to watch. They are not still breached the new low from the start of the US session. So we can take a buy in the case of Australian dollar also. It's 10 pips below the current market level. We will try to keep a limit buy order and the stop below that. $30 pips below. Okay. I think I just shown you the important currencies, and especially in the case of Euro, USD, GBP, as well as GBP, they are likely to fill it up. Okay, fine. We got it. Okay. So that is how they just play a trick. So we have to keep slightly lower, about 10 pips or 12 pips, depending upon the market momentum, the buy order, and we will be able to get it filled. So there is no need to buy it. So whenever they come to this particular level, bid level to 0, immediately you will see in the platform our order is filled. So that way we will be able to get it nicely from the other market. Okay. Okay. Bhatnavan says that there will be a swing because of Bernanke's speech. Fine. So let there be any trigger in the market, but ultimately we need to find what they intend to do out of that. They use it only as an excuse for making upward and the downward move. Okay. But ultimately, whatever they want, they will do it. And you know that yesterday, for Bernanke's speech, they made the quick drop during that of the early part, mid part of the US session, and then subsequently they gained the levels only. Okay, so if you think that that is going to have a permanent impact, then we will be misguided. So we have to see that it is only a knee-jerk reaction just to confuse the traders, and subsequently the players will make their own moves depending upon the pending positions of the traders. Okay, so I have taken the positions in the case of Euro and GBP. Okay, GBP is slightly making a dip, and they are coming closer to that of Australian dollar, and still USD-N is not filled. So we can keep the limit order. Once it is filled, 1.5242 will be the limit. So 2 pips below, 1.5240. And still these two are not filled. So once it is filled, then we'll keep the limit order. So you'll be wondering why I am just keeping such a tight limit order. Because there is a high they are set. So when they come to that other high, how they are going to handle it during this particular session, we have to find out. And when they come closer to that, we can just move away the limit order after keeping stop at entry. Then we can keep 75 pips from this, or 45 pips from that of the entry. And if the going is good, if the momentum is fine, then they are making about 20, 25 pips swing, then that means they are going to get a big momentum in the market. So at that time, you can just keep 75 pips above that of the entry level, the limit. Otherwise, the high, what they are set around that, you can keep the limit. So this is how we try to take the decisions with regard to the entry and exit. Okay. Now, let me explain to you. With regard to the initial lows and the highs, what they are set. And also, I'll explain to you the forecast, what I have given it on Monday, and how exactly they have been doing it, very similar to that. So in the case of Euro, they are still holding below that of the initial low, but they are not breached the new low. And in the case of GBP, they are keeping it around that of the initial low and slightly above that now. Okay, so initial low, and they made a downward stop and they are holding it. And yesterday I was telling you that 1.5160 above that they have just made the quick gain. That was the initial high. And subsequently, when you see that they are holding around the same level, those who are sold below that of 1.5150, they are not still given the profit booking opportunity in the case of GBP. So all such traders will come for short covering as the week proceeds. And then the last day, when they make further gains, then automatically they will come for short covering. You know, GBP is the currency which they use it to create the market sentiment and also to change the market sentiment. So GBP was the one which was making drastic drop, and subsequently, you know that when BOE was making the interest rate announcement, when there was no change, they made a big drop last Thursday. And then subsequently, for the minutes of the same BOE, they made a big rise of 100 pips. So what you can derive out of that? So it is only the data release is used as excuse by the other players. Ultimately, they make their own moves, how to trap the traders and how to how to induce them to take wrong positions, and subsequently how to change the market sentiment. They are well versed with that, and they continue to do it day in and day out, and still we get surprised out of the market moves. And we think that when Bernanke's speech is there, and definitely they will make a swing, and they may not make a swing, then we become disappointed. So sometimes, when you think that already the market has got the price built in, and then they will suddenly make a big rise or a big drop. So that is how they continue to give the surprise to the traders. There are so many days when they are releasing non-farm payroll, when the non-farm payroll was negative, and they simply make a quick drop in the case of Euro and GBP and say that, okay, it is already structured or the price is already built in. And that is how they try to give excuses. Ultimately, what we need to know is what they intend to do. So I use the gross derived forecast, which is derived from that of the statistical algorithm. And I was telling you that yesterday that they have been making the swing and rise move. I was about to show this slide at that time the net went off. Then subsequently the swing and slide happened during that of the US session, and they made a final firming up, but they did not breach the high what they have formed. And during that of the Asian session, they made the dip and the quick rise. And swing and slide was seen. Swing, I was expecting slight rise, but they did not do that, and they made the downward move and slide. And now they are expected to make the swing and quick rise. So what could be the trigger? I don't know. But still, let us see how they are going to handle it. And we have taken the positions now here using the live market code page. And so Euro GBP filled, and USD Australian dollar is not still filled. So we'll try to modify and take it at 55. And modify the stop. And yen, they already gone up, so let us not chase it. If they come down, we'll pick it up. Otherwise, just forget about it. So there is no question of emotion involved. We will not think that we have missed the opportunity because it is closer to that other high. There is no point in taking it. If you take a buy now, how much of profit you can make? No, they may do a stopment, and it is not Friday to make a massive move. So it is not ideal to take a buy position. If it's near that of 99.47, 99.50, then it's fine. We can take a buy. Already they have gained about 89 pips. So further gain about 100 to 150 pips. So we will not take, unnecessarily invest our equity and try to wait for a prolonged period. Now let me give the normal explanations. Okay. So to track the market, we use the live market code page, and those who have not been following me for a long time, they can just follow it, and that will be useful. And those who have been regularly tracking me will know the procedure. So I'll just briefly explain how the market trading system works. So we just open out the live market code page, and this is the page. I use it as a single tool for my trading decisions, and this is after prolonged experience. I just come to that and discarded all the charts and other statistical analysis because I found that they will work very well if the market is not manipulated. If the market is being manipulated and they know the players try to pretend as if the market is following the technicals and just reverse it and say that it's due to fundamental. And when you think that, okay, fundamentally this currency has to become very weak and things like that, and fundamentally US dollar has to gain more levels, then immediately they will just reverse it and say that it is technical or whatever it is. So ultimately we are going to be fooled. So let us not get fooled again and again. So we will find out what their intention is and try to trade along with them. So we note down the initial lows and the highs around 3:30 GMT, and that is what I showed it in my earlier slide. So around 3:30 GMT, we note down the initial lows and the highs using the live market code page and then find out where the market is. As I explained to you, on a daily basis, I note down and afterwards find out where exactly they are trying to hold the market. So this was the initial high on Monday, and they are trying to hold around that 1.3071. And Monday they came down to 1.3045 or so, and they are not gone to that level. They are holding it here. And in the case of GBP, Monday it was holding around 1.5100 area, and they gained the level, and Today initial high was 1.5192 and came down little bit, and that was a great buy opportunity. And then subsequently they gained the levels and they are holding below that of initial low. And they are expected to slowly gain the levels using some triggers, and they are not making any big drop for Bernanke. USD yen, they just gone higher and higher. That is what I was telling you. But next drop we will buy it again, and we will not chase it, and every day we will continue to get the trading opportunity. We don't get it, we don't repent, and we always think that market continues to give the trading opportunity. It doesn't get exhausted. Then in the case of CHF, 94.06 was the initial low. They are not breached it. 94.68 is the high. They are closer to the high. And the initial high was 94.22. And during that of the Asian session webinar, I was explaining to you that the denominator currencies, they are expected to gain more levels and hold them at a higher level. And then they continue to gain the levels in the case of the numerator currencies. So alternatively, they do this in order to gain the levels in the case of all the majors. So the numerator majors will be showing the USD weakening move, and the denominator currencies will be showing USD gaining move. As a result, US dollar index may not be showing much of a change. So those who have been following the US dollar index, because of late many people follow US dollar index as the indicator for the expected moves, so they take this opportunity as a contrarian. By making contrarian move, they try to address them differently. Then in the case of Canadian dollar, 1.0401 was the initial low. They are not still breached it, and they are still holding it. It is a good buy opportunity. And the high was 1.0420, and they just made a small upward move above that, about 19 pips. Still, the spread is only about 38 pips. So it is not ideal to take a buy position now. When the spread is less than 40 pips, don't enter into your currency. We may not be able to make any profit out of it. Ultimately, no, we should not have any sentimental attachment to any currency, and we should not think that this is the strongest currency, this is a weaker currency, so we'll buy the strongest currency. And these are all temporary, no? And you know that earlier I have seen in fxtrade.net, many people say that Australian dollar is the strongest currency and it is better to bet on that. They made it the weakest. So that is how they do it. So, and also everybody was thinking that gold is a safe haven. And now nobody is talking about safe haven condition. So you can understand that they create the hype and simply induce the people to digest it and think of some other excuses. No, they create another excuse and people tend to believe such excuses. Now, everybody is telling that US dollar has to gain invariably. US dollar has to gain invariably. That is what everybody is telling it. But they are gaining slowly. The levels in the case of Euro and GBP, they are not drastically dropping them. And for such answers, the example could be the denominator currencies. Then when you look at the denominator currencies, then we will say, yes, US dollar is really gaining. But they are gaining also in the numerator currencies. So the explanation may not fit in there. So that is how you find the single currency is being taken into consideration. And we can give any sort of attribute. But if you see the overall market condition, then only we will understand what the players are trying to do. Then in the case of Australian dollar, 0.9180 was the low, and they just breached about 49 pips or 50 pips and came down to 91.59 and was 39, and they are now holding closer to that. Almost close to 100 pips drop, they have done it. So they are making a dip, probably the speech, and later on we will know where exactly they are expected to do. One confirmation is the forecast says that they are expected to make a quick rise. Then yesterday they were making a rise, and then question answer session they used to do just reverse. Today again they may just try to play. See, they come closer to the low. See how they are holding it. Just watch it. Then you will be able to understand what they are trying to do it. No? Ultimately, the live market code page will act like a tick chart. And it is extremely difficult to watch the tick chart because it will continuously run. Instead, if you use the live market code page, overall market move you will be able to see it. There is no need of opening all the 6 charts and see what's happening. Simple live market code page. But you need to remember the levels because you need to have a good memory power to keep in mind the numbers. Then you will find that using the live market code page is the greatest advantage and the simplest tool for trading decisions. So let me just minimize this chart. Okay, after noting down the initial lows and the highs, and also we note down the net change, what they are doing it. That's what I was referring to, that they had done about 99 pips and still they are not breached. They come to low and not breached the low. So our Australian dollar position is filled. Okay, 99.55 and 91.25 we have got the hedge order of the stop. So it is already filled. So this filled, this filled, this filled, and yen is not filled. I'm just going back to this to find out where exactly we stand. Then we need to identify the type of moves. And there are 2 categories, the moves which are happening in less than 30 minutes and moves which are happening in more than 30 minutes. So the moves which are happening in less than 30 minutes are stop and a false move. The stop-ins they do during start and during the early and the late sessions times of the 3 different session timings. I forgot the slide. Okay. The Japanese session, European session and US sessions. So in between you come across the gap time. So early and the late session. Now we are in the US session. 13:30 to 15 GMT is the early US session and 19 to 20:30 is the late US session. That is 1.5 hours from the start is the early session. 1.5 hours from towards the close is the late session. So early and the late session they make the stop-ins and during that of the mid sessions they make the early and the late session they handle the majors and mid session they handle the crosses and during the gap time they make false move. And also before that of the data release, they make the false move. So these are all the 2 types of moves which are happening in less than 30 minutes. And the moves which are happening more than 30 minutes, up to 2 hours, is one, that is namely extended move. So extended move is a typical one here in the case of USD yen. They just breached the high and stayed above that of the initial high, 99.86, and they continue to gain the levels. Sorry. They continue to gain the levels for more than up to 2 hours and then reverse or stop cutting the new high. Then it is extended move. Then slowly after building the sell positions, they continue to slide during the next sections. But if they make an intentional move, then they slowly gain the levels. So now in the case of USD yen, it is an intentional move. Because slowly they are gaining the levels and cutting that of the high every 30 minutes to 1 hour. And that means they are holding above that of the initial high, 99.86, and they continue to gain the levels already about 100 pips gain. They have done it, and they could gain another 50 pips, about this 150 pips during the day. So here in the case of Australian dollar, for coming to 91.39, they are just slowly gaining the levels. See, that is a false move. See, now you understand? The false move is the one which comes up to that of the low and reverse without breaching it. The stop point is the one which breaches and in less than 30 minutes they reverse it. So if you find that they are making a false move, that means below that of 91.39, a lot of traders are holding sell positions. And they are not giving the profit booking opportunities to them. That is what it reflects. And here, see, if they want, they can drop 50 pips or 100 pips. Not a big deal for them. They can use one single all or none order and just drop 100 pips. And yesterday they had done 100 pips gain in the case of GBP. Similarly, they can drop it if they want. But that is not their intention. They want to make money out of that. By every move they do, So we have to find out whether it is a stop and. Stop and is just to hit the stops and then buy all those stops, and then subsequently they gain the levels. Then in the case of, okay, there is a question, why 30 pips stop loss? They make a swing for about 15 to 23 pips every time. So if we keeping into consideration another 3 pips of the spread, it will be 27 pips. So to be on the safe side, we keep 30 pips. That is an optimal stop. And people may say that I can keep 5 pip stops, 10 pip stops. It's fine. But if you do not want the stop to be hit so easily, then you have to keep 30 pip stop. In the case of majors and the commodity pairs, in the case of crosses, we have to keep 50 pip stop because the spread between the bid and the ask is high here. Okay, it's high, about 5 pips, 7 pips like that, 6 pips. So obviously, no, it will be less volume traded when compared to that of the majors. So the players can do the whipsaw moves very quickly. So if you don't have the hedging facility, then you can use the stop. Otherwise, you can use the hedge and do the trades effectively. So intentional move is the one. They just go above and continue to gain the levels. And now today they have been handling USD yen on the upside. And tomorrow also, initially they will gain during the Japanese session, USD yen. Afterwards, quickly gain the levels in the case of Euro and GBP as well. Today also, they are expected to gain and continue to gain. Tomorrow, that's being weakened. So, swing is the one, they just make a small move between the low and the high. Now, they increase the spread in the case of USD CHF. Then, a small dip, it can take a buy because it is in the positive net change and they have not breached the low. So, in the case of Canadian dollar also, it is in the positive net change and they have not breached the low. But still, the spread is not improved. If they improve it, afterwards when they come down, you buy. Then you will be able to see the quick rise happening. So sometimes they just neglect certain currencies when the spread is less than 40 pips. So if you take a position in such neglected currency, you may not be able to see a good profit on that. So hence, I ask you to identify whether it is more than 40 to 50 pips spread. Then the trading strategy. So 30 pips stop loss order. And once a position makes profit, we keep stop at entry and the trailing stop. And then limit order or a take profit order as I explained in the trade what I have just taken. Then entry 30 minutes from the start of the market or after extended or intentional move when the low or new low is not breached. Take buy when the high new high is not breached. Take sell as a swing trade. So near that of the high, we try to take the sell. Near that of the low, we try to take a buy. So it is a logical trading. No, technical trading is we try to buy above that of the initial high. And we try to take a buy near that of the initial low. In case if they have breached and they have gone down, hedged, then we wait for the type of move they are doing, whether it is an extended move. And if it is extended move, they formed the new low, afterwards not breaching it, we book profit in the hedging and keep another hedge order below and then trail it up as they gain the level. And if it is an intentional move, we wait for 2 sessions on the start of the 3rd session and try to close the hedging with a profit and keep another hedging order 30 pips below and trail it upward as they gain the levels. So it is a simple method. If you follow this using the trading strategy and the market reading, you will find consistent profit making will become reality. Coming to our position. So Euro is making a slight profit and GBP is making about 16 pips loss. Australian dollar has come almost closer and came down to 91.39, a typical false move. They had done it and in order to gain the levels. And slowly Australian dollar will gain. As I explained many times, the currency which is making less negative net change will gain first. It is making 29 pips negative net change, it will gain first. Followed by that Euro. Then afterwards Australian dollar. This they will try to do it during the mid sessions in order to handle the respective crosses. When they gain more in the case of GBP and gain less in the case of Euro, what will happen? Euro GBP will come down with a negative net change. So you can understand how they are handling the crosses by making moves in the case of the majors. So it is not other way. Many people think that because of the volume variations in the crosses, people think that the majors are showing the reactions. It is other way. The players only use, like the puppet, the majors and the commodity pairs. They move two pairs at a given time. So you have to identify those two pairs. Then afterwards try to bet on that and you will be able to book profit. Then subsequently, when they shift it to another two pair, you just close those positions and enter into the new currency where they are handling the crosses. So that way, if we try to do it, we will be able to really find that trading is enjoyable and you will not become frustrated or you will not become really upset or tensed, etc. So I always preach trade at ease. So if you want to trade at ease, first of all, you have to get rid of the market surprises. So to get rid of market surprises, how the surprise is being triggered? Because when you expect something, the opposite happens, you become surprised. And if the market moves in line with your expectations, you don't become surprised. But your greed comes in and then you fail to book profit. So you have to control that and avoid becoming surprised and continue to think about the trading strategy. So when the position is making profit, I'll keep stop at entry so that I will not make any loss. That is the first step one has to think in trading. A hard-earned money just like that on a speculation, we should not lose it. And then once the position makes further profit, we can use the trailing stop in the profit-making position and try to keep that limit 45 pips or 75 pips above. And once they gain during that of the late session, we just close it within the session. So like how I had done yesterday European session, you can just take the position during the start of the session and close it by end of the session. If you are in US, you will be able to trade during that of the US session. There is no need for you to watch the Japanese and the European session. And many people think that only during that of the Japanese session or the European session they make big moves and we sometimes lose the great opportunities. No, market continues to give the trading opportunities during all the sessions. And today it might be subdued during that of the US session. Tomorrow they will make it active. So there is no need to repent and think. Because I have seen many of the members, they say that no, they are trading very actively during that of the European session. I want to keep awake during that of the European session so that I will be able to do some good trades. Then early, it is around midnight or late night, and they try to keep awake and try to do one or two trades and go to sleep without even informing me when I am in chat. And later on, they miss the US session. So what is the big deal in that? So ultimately, if you watch the session, which you can, without any constraint, watch, and you'll be able to really see the trading opportunity comes in. So the simplest method is use the live market code page and try to see where exactly they are. And if they are closer to the low, around 13:30 GMT, watch it up to 14 GMT. If they are not breaching it, and you try to take a buy. And you will find that they will only make a false move and start making the rise. They will not make stop and during that of the other times. So you have to understand this. So their type of moves are definite. And I have been doing it for 15 to 16 years, the same to various members, and through FX Street I have been giving this for about 11 to 12 years. Still they have not changed their strategy because it is difficult to change the strategy. There is no alternative available for that of the players. The players may continue to change because those who are the richest, they might pump in their money and give it to the other big players, and the banks could be used as the triggering point, and they may use the bank's treasury to operate the markets. And they are positioned in various countries and they try to do the circular trades and try to rig the market on the upside and the downside. With all the restrictions and with all the NFA, they try to manipulate it effectively. So you have to really appreciate their skill. And then they continue to earn because such billions and billions of dollars cannot earn when it is deposited with any bank. It can be only invested. And even the banks, when they take it in the investment arm, and they have to invest it in the market and rig it. Otherwise, they cannot earn a matching profit for such huge investments. So we need to understand that it becomes mandatory for them to operate the market. And it is something like catching the tail of the tiger. So when you catch the tail of the tiger or when you catch the tail of a snake, you have to continue to rotate. They will never exit out of the market. If they don't rotate, immediately it will try to beat them. And they may lose their number one, number two position as the richest in the world. And that comes out of greed, nothing more than that. Nobody can eat gold, but it comes out of greed. You cannot help it. Anyhow, there is no point in blaming them, and we try to use a technique to read their intentions and try to find how exactly we earn a small profit in such trades. That should be our motive. So if there are any questions, then I am willing to answer to this question. There are only 5 minutes left, I think. So Bhatnaban was expecting a big swing for Bernanke, and they have not done it. Because every time, whenever you come across the subsequent days, Bernanke's speech comes, and they don't do big moves on both the days. Only one day they try to create a surprise. The other day, when the traders expect something else, they just do another move. And they make their own swings now before gaining the levels. Gaining the levels in the case of denominators, and then subsequently they will gain in the case of numerators. See, after operating that Australian dollar near the low, they are now trying to push Canadian dollar closer to low. Then we can pick up near that of the low, and definitely they will make a false move near that of the low, and afterwards they will try to rise and breach the high. You can just watch. You can easily read their intentions if you watch all the 6 pairs simultaneously. And if you are capable of watching some more currencies, you can watch the crosses also. Then you will find that it is very interesting to observe all the currencies simultaneously and read how they manipulate the market so effectively. And once you know the trick, then you will not become a victim to such act. Okay. So no more questions. So there could be a possibility that people have understood. Okay. Chowkyard. UAD, I mean Australian dollar, I suppose. Net change is more than 75 pips. It is indicated that it will not be reversed today. Yeah, it will not gain all the levels, and it can gain up to the next psychological level, 0.92. So in the case of Australian dollar, I forgot to mention. So the Australian dollar, the initial low was 91.80. Okay. So when they breach 91.80, you just see how far they are able to go. After 91.80, they will try to go above the psychological level, 92, and try to hit the stops of such people. They may not go up to 92.51. So we will try to keep a limit. 91.96. Okay. Hope you are able to follow. Just 2-3 pips below that, so that you will get a definite fill. Nothing more than that. No other logic in that. So that we will be able to get a definite fill. So as far as USDN is concerned, it was not filled. So I am just removing the order, or I will just put. I'm just deleting the order. Okay. So these three currencies we have taken the positions, and you can watch during the session how exactly they are trying to gain the levels, then understand how to track the market. And once you have the full understanding of this, you will be able to really do very good trading without any constraint, without much complications, without referring to so many people. So, okay. Lam Shirley, you mentioned the fourth week is the trending week. Yes. See, in a week, okay, how do I show it? So normally you come across first week, second week, third week, fourth week in a month. The first and the last week they do the trend reversals. They try to make a drop, and create the bearish field and suddenly reverse from that as the second week. Then third week also they continue to gain the trend, and this time it is an upward trend. So they continue to gain the levels, and then afterwards the fourth or the fifth week, that is the last week, they just make the trend reversal again. And they don't do hat trick. So if they rise 1 month, then they rise second month, the third month they will definitely make a drop before making further rise. So they don't do hat trick. Then within a week, there are 5 days in a week. Monday they make the week beginning false move, and Tuesday they make the either way stop-ins to confuse the traders. Then Wednesday onwards, they make a drop and accumulate buy position and continue to rise. Thursday and Friday they continue to rise. They don't make further drops. They will not go to the what they have shown it on Monday. So that you need to understand. So you have to plan your trades depending upon the type of moves they are doing it within a day. That is intraday, tracking the forex market together. For the weekly moves, you need to understand what are the type of moves they do it in a week. And the monthly trades, that is a position trade. Just take position during the start of the month and close it by end of the month, like options trading, derivative trading. Then you can just follow what they are doing it. How they have been doing it. Australian dollar, it was pretending as if it is going to go below 0.90. They just created such a fearful condition, started accumulating all the buy positions slowly. They are expected to gain the levels. So that is how every time, even Euro, they just showed it to 1.29 area. And GBP, they showed even 1.49 area, 48 area. How they created it? Just to create the fear. And it's only a circular trade by which they create all the fear. And if you simply think that it is bearish, the country's economy is going really bad, in 2 days' time you will find everybody is talking that country economy is booming. How can the economy change in just a matter of 2-3 days? I don't understand really. Okay then, I don't want to take much time, the time is left. So I am thankful to FX Trade for rescheduling the webinar to be presented today. And also you people who have come here to listen my webinar, and it's being recorded. And those who are not in a position to attend the webinar can just listen it from the webinar. Any questions, you can email me. I'll be willing to answer to those questions. dr@i-noindices.com, my Skype chat and my Yahoo chat ID. I'll be available from that of 3 GMT up to 18 GMT and online. Then my phone numbers I give. And next Monday, I'll give yet another session of Asian session live market analysis and try to give the forecast for that particular week. Thank you one and all. See you on Monday.